Hi there, you're watching Your Trades on ET Now. This is Priyanka Pul along with me, Shriyansi. Shriyansi, clearly we've seen 5 straight set of weeks of weekly losses. We've started the 6th week with a little bit of positiveness, but then Nifty clearly failed to hold on to the gains. In fact, too much of swing movements we saw on Nifty, both sides. There was a range of around 330 points on Nifty, what we saw. But the clear trend on Bank Nifty, which was lending the support to the index. Bank Nifty, we saw a good short covering trend, some 600 points surge we saw in Bank Nifty, and that's majorly led by private banks. HDFC Bank is showing strength. In fact, a lot of private and public SBI kind of banks also showing strength there. Banks, in fact, banks and financials, they've not done that bad also in earnings. But this is where we thought that maybe the another leg of up move could come from banks and financials only. But clearly, it was a lackluster trade. If you talk about the broader markets, downward pressure clearly on mid cap, 0.7% we lost on mid cap, small cap dragged down by 1% lower. Top sectoral which gained today was IT. If you talk about the first 10 counters on Nifty, they come in from IT pack only. Second space was PSC, finance, and a lot of PSU banks which were in action today. In fact, whole IT pack was buzzing, and a lot of stocks were buzzing on the back of the brokerage notes. On the earnings, stocks were clearly reacting. Stocks like Trent, on the GS note especially. Now Tata Motor post the numbers and the brokerage notes were supportive. That's what we saw move in Tata Motors also. On the flip side, what we saw on Asian Paints, stock tumbled 9%, and of course 43% of drop in the PAT. Volume declined by 0.5%. Brokerage have cut their target prices. On the flip side, Britannia, before the numbers also started to trade in pressure only, it was slumped by 6%. Apollo, weak sort of numbers came in, guidance was weak here. This one also lost, and quite many counters from mid-cap space. If you look at Tube Investment, Tata Elxsi, Whirlpool, many counters were reacting to the earnings today.
Well, absolutely. That just about sums it up. And when you take a look at the power financiers, PFC, REC, those are the counters that were also in focus. And when you take a look at the moves coming in on your screen, 7.2% uptick is what you saw for PFC, REC as well, 2.7% uptick coming in for that one as well. So holding on to those, shade of green coming in, at least the power financiers. Can't say the same about Asian Paints, because let's take a look at that particular counter. When you take a look at the show that we had in terms of the second quarter, it was quite the dull show coming in. Revenue downtick of just about 5%, but it was a net profit that slumped just about 42% coming in thereabout. So you did see that impact being reflected on the stock as well. Downtick of 8% coming in for that one. That's Asian Paints. Info Edge as well. On the flip side, that had strong numbers coming in the second quarter, and it was Nomura that also hiked the target price to 8,630 rupees, and that counter was in focus throughout trade. Uptick of just about 6% that we saw coming in for Info Edge. Signature Global as well, good numbers coming in there as well, and that's the impact that you saw coming in on the stock as well. Holding on to that 1% plus gain coming in is what Signature Global was doing. When you take a look at Equitas Small Finance Bank, that's the one where you saw a weak set come in for the second quarter, the profit nosediving as well, and you did see the impact on the stock, like you can see on your screens, 5.6% downtick coming in for Equitas Small Finance Bank. In terms of what else we should be keeping an eye on, it's India CPI that is expected to reach a 14-month high to 5.8%. Now, mind you that RBI's tolerance band is 2 to 6%. So that definitely is something that we're keeping an eye on, Priyanka. And lastly, we're also keeping an eye on food prices that are likely to increase at a faster pace. Core inflation that is likely to be at 3.6% as well. That is something that we're also keeping an eye on. And in terms of what else we're keeping an eye on, the government is going to be inviting 8,000 megawatt solar projects bids, and that is something that we're hearing from sources. So that is an important update coming in as well. But tell you what, let's also take the conversation about the markets then forward with our guest today. Akshay Bhagwat, Senior Vice President, Derivatives Research at JM Financial Services, is joining us right now. Akshay, hi there. Just tell us a little more about what you're making about the current trade that we've seen in the day gone by then.
Good afternoon. Thanks for having me on the show. Look, it's been 15 odd trading sessions that markets have been stuck in a trading range. The upper band of the range is 24,500 and the support is, as of now, is 23,800, but still there is no signs of reversal. It is just that things have cooled off. Majority of the events which the market was looking forward to have been done and dusted. The negative part is that still the FIIs are on a selling spree. I think the November month is already 15,000 crores of selling. The good part is India VIX has cooled down. So it's a mix of good and bad events all coming together. The markets are looking for fresh cues. But strictly from a technical perspective, if you were to look at the indices, still the broader trend is slightly on the negative side. The support is in the making, but no confirmations as at yet. If 24,500 breaks and sustains, that will be the first sign that market is trying to stage a comeback. Till then, trade the range, sell at resistance and buy at support. That's how the markets are going to trade.
Akshay, 24,500 looks very far where at the moment we are trading at. But then where do you see the margin of safety, or maybe the kind of short covering trend we saw on banks? Would you be buyers in banks, and or otherwise, what would be your specific trades?
Actually, the market breadth is broadly still negative. If you broadly sum it up the way the last couple of days have gone by, almost you can say 70% of stocks are still bleeding. The sectors are still seeing a steep sell-off. Every rise is being sold into. Yes, banks in pockets have seen some bit of buying action here and there, but still there is no conclusive evidence that, there is going to be a strong directional move in the banking sector as yet. Even if you were to look at the Bank Nifty, the Bank Nifty has had its moments of glory on single days when the Bank Nifty was up almost around 1,000 points of 4 trading sessions back. But clearly the level of 52,500 here is a resistance. So, it's more about short-term trading, more of day trading as one can look at the current setup in the markets. Really, Bank Nifty still is in a range 51,000 on the lower end and 52,500 on the upper end. It's again just about trading the range, sell at support, sell at buy at support and sell on resistance. That's how the price setup is. So be with the range bound setup, still there is no definite conclusion about any major reversal or uptrend in place in the Bank Nifty as such at the given situation.
Akshay, of course, we'll have to wait and watch for both the indices. So any specific trades that you're picking at this moment?
Yes. So if you're keen on the buy side of trade, there are opportunities both on the shorting and the buy side. So here, if you're keen on the buy side, my setup here in Titan works very well because it's an excellent risk reward payoff I'm looking at. Titan has shown good demand from its support zone of 3,100. So we have seen some bit of buying action combined with good volumes and delivery based buying at the supports. So it's a good trading setup where if the stock does stage some bit of a recovery or reversal, you can see targets of 3,350 or 3,400 in the making from a short-term trading perspective. So Titan would be by buy bet in the current market circumstance. 3,050 is the stop loss which you need to maintain on this buy trade. And if you're looking for shorting bets, then from the FMCG pack, it has to be Nestle India, which has already staged a negative breakdown a few trading sessions back. The level was at 2,350. Last few trading sessions have been range bound, but I believe the momentum can return back on the negative side because the trend is negative. Looking at downside targets of around 2,100 odd from a positional perspective. Stop loss you can maintain around 2,345 on this sell trade.
Keeping an eye on that negative momentum and that negative trend returning. Thank you so much for taking time out and joining us today, Akshay. But with that was the take coming in from the expert then about the stock picks that he has as well as what he's making of the market at this point. But tell you what, let's keep it going with important commentary then, even with looming asset quality pressures. It's the banking sector that Vineet Sambre seems to have a bullish stance on. Well, what's his rationale then? Let's hear out an excerpt of the chat that we had with him as he details his view. Tell you what, before we do that, let's also take a very quick break at this point. When we come back, we'll get you some more news and updates, so don't go anywhere.
Welcome back. You're watching Your Trades. And on the flip side, the top loser from the derivative space, and of course, the Nifty counter was Asian Paints. It was a weak second quarter for Asian Paints. Muted consumer sentiment, price cuts, increased discounts, and exceptional loss. All these combined together led to a weak quarter. However, the management expects the price hikes taken in this quarter will aid the company in the second half. Somit joins in with the highlights as well as the brokerage's views. Somit.
Well, if you look at Asian Paints number, that were pretty much a mess on all fronts, be it revenue, EBITDA margins or the net profit. The numbers were pretty much lower compared to what the street was estimating. In fact, if you look at the net profit number, it has missed analyst consensus estimate by nearly 36%, which is the biggest miss that we have seen in case of Asian Paints at least since 2014. Now, on the volume front, it had declined by around 0.5%. The first time since COVID that we have seen a volume decline coming in for Asian Paints. And what is most surprising here is that the peers had actually reported a volume growth, and in front of that Asian Paints has reported a volume decline. Its peers like Berger, Kansai and Akzo had seen a volume growth of nearly 4% or high single digit compared to last year in the second quarter of FY25. When it comes to the EBITDA margin, for the first half of this financial year, margin stood at close to 17.3%. This is way below the company guidance of around 18 to 20 odd %. So it remains to be seen whether the company revises its margin guidance on the lower side or not on the conference call that will be held today in the evening. Apart from that, if you look at the volume decline is also higher and the revenue fall is also higher when compared to peers, which means that the Asian Paints could have lost some market share in the second quarter of FY25. Now, why such a weak set of numbers? The company has attributed this to weak consumer sentiments, heavy rains and floodings in parts of the country, which also impacted the quarterly consumption for the company. Apart from that, the company is also saying that revenue was affected by the price cuts taken last year and the shift in product mix, which also impacted the margins, and also because of higher discounting that we had seen in the second quarter. On the positive side, the company has taken a price hike in the second quarter and is optimistic that margins could recover in the second half of this financial year. So the conference call will be held today, and the two most important things to track from this would be firstly the management commentary coming in on the demand in the second half. What are the early signs that they're seeing and how much of a benefit that they are confident of realizing on the back of the price hikes that the company has taken in the second quarter.
Obviously, we have seen last two quarters have been weak for Asian Paints. Even we have seen in quarter one also there was decline in revenues and even the volume growth was below than what the expectation is. Q2 also was was quite disappointing for the Asian Paints. Now, it depends on how the demand environment is shaping up, especially in the festive months. We need to understand whether there is a pickup in the demand, and that will help us to understand how the volume growth momentum would be in the coming quarters. Obviously, competition is there in the market, and every large player will try to gain market share or to maintain market share. Birla Opus definitely is a new player, will definitely try to gain share from some of the large players. So, it is still, we need to see how the performance would be in the quarters ahead. But in the near term, obviously, there would be pressure on the margins, considering the fact that there is a volatility in the crude prices. Also, companies would be spending on, promotional and, higher media spends, basically, to maintain their, shares in the market. So,
Alright, then that's the analyst take as far as Asian Paints is concerned. But moving on then onto the brokerage calls that we're seeing this evening as well. Goldman Sachs has initiated a buy on Trent and United Spirits today. Why is Goldman Sachs then bullish on the two counters? Ria is standing by with all of those important details. Ria?
Yes, so let's take a look at what has happened on Trent. So Goldman Sachs has initiated a buy rating on the stock with a target price of rupees 8,000, which indicates a 27% upside. Now they have said that Zudio is a multi-year market share gain story with a low competitive risk, and this growth story will be led by market share gains. Now, although there has been some moderation recently due to the urban slowdown, they do expect a recovery on this front. They've also said that even though Zudio's market share is still small compared to the global leaders, they do expect Zudio to grow at a CAGR of 28% over FY24 to 35 to reach rupees 1 trillion in sales. They've also said that Westside is going to continue to deliver a steady low double-digit sales growth, and the sustainable margins of Trent's fashion and lifestyle business could also be higher as the Zudio stores mature. year. They've also highlighted that Star Bazaar may have long-term potential, but we will not see a Zudio-like store growth for this segment, and we will likely face some stiff competition from the quick commerce players. But reacting to this positive news, Trent is up around 3.5% in trade.
All right, so Trent was up today on Goldman Sachs New as to studio stories stays intact. Thanks very much, Ria, for those insights. Now, moving on, P.N. Vasudevan, who's the MD and CEO for Equitas Small Finance Bank, is seeing some green shoots in terms of deterioration. The bank's also planning to offer a range of products to help customers. He also mentioned that the 100 crore buffer can act as cushion for the credit costs. Listen in.
Deterioration was not more than the September, and that is the kind of green shoot that we saw in October. And as I mentioned, we have put in a few initiatives on the ground, including adding more people on the field, helping them to spend longer time with the clients. Specific guidance, we are not really in a position to guide you just now in terms of what likely credit costs we may be able to see in microfinance in the next 2 quarters. But by and large, I believe that the 100 crore, the buffer that we have created, should significantly help, cushion the potential credit costs that we will see coming up.
That's about Equitas Small Finance Bank. Went home with cuts of about 5.5% coming in on that one. But let's also take a look at Info Edge then. A strong quarter is what we saw in the second quarter. In fact, Hitesh Oberoi, MD and CEO at the company, also says that GCC as well as IT hiring are showing signs of improving. Also adds that he also expects hiring momentum to continue into the second half of the year as well. Let's go across and listen in to what else he then had to say.
Even the IT companies are back to hiring once again. Most of them had overhired and had built up big benches, and utilization rates have fallen. Now, for most companies, they're back to pre-COVID levels. So, it's hard to predict what's going to happen in this world. It's a very volatile world, a very uncertain world. But hopefully this momentum will continue. On the whole, it does look like GCCs are hiring once again. IT companies are hiring once again. Even startup activity is picking up. So net, we are bullish on IT hiring going forward.
So bullish on IT hiring. The stock was up by 4% today, and here the takeaways you were listening from management. Moving on, there were a couple of other stocks also which were buzzing on the back of earnings and the news flow. Gaurav is joining in all those stocks. Gaurav.
Well, yes. Let's begin our list with the number of stocks which are buzzing on the back of numbers. So first we have is Bajaj Consumer, where we saw weak set of numbers. Revenue remained flat, but when we talk about net profit, we saw a decline of around 14.5%, and as a result, we saw some pressure in this counter. Next, let's talk about Saxoft, because when we look at the numbers, profitability has increased only by 2.5% on a sequential basis. And at the same time, when we talk about EBIT margin, we saw a little bit of contraction of around 30 basis points. And as a result, we saw some downward pressure in this counter as well. Next, let's talk about Apollo Hospital, because numbers came good. But when we talk about commentary, we saw some pessimistic comments coming up from the management. Now they have lowered the target for margin expansion from 100 to 150 basis points to 50 to 60 basis points. And at the same time, they have also withdrawn their 50% GMV growth guidance for Apollo 24/7. And as a result, we saw some pressure in this counter. Next, let's talk about Biocon, because US FDA has now classified one of its facility which is situated in Bengaluru with voluntary action indicated. And now Motilal Oswal says that this approval was awaited for the last 15 months, and with this we may see some visibility on product approvals even ahead. And as a result, we saw some uptick in this counter. Lastly, let's also focus on ITI, because this company has been announced as the lowest bidder for a project around 1,540 crore rupees. And when we talk about some of the gainers, PFC is also going to be in focus, because now brokerages have maintained their bullish stance on the back of the good set of numbers. Bernstein has maintained its outperform rating with a target price of 620 rupees. CLSA also maintained its outperform rating and a target price of 610 rupees. And as a result, we saw the stock was up more than 5%. So definitely watching out on all these counters on the back of the numbers, as well as news flow that has come throughout the day.
All right, thanks Gaurav for that update coming in. So there you go. That was the list of stocks that were buzzing away in trade today. But moving on, then, good news for India's green energy ambitions. Sources tell ET now that the centre is set to invite bids for 8,000 megawatt of projects in the rest of the fiscal. In fact, let's go across to my colleague Prakash Priyadarshi, who's standing by with more details on this one. Prakash?
Yes, we are given to understand that the government is likely to invite bids for 8,000 megawatt capacity of solar projects. in the remaining months of the current financial year. A very significant development coming in as sources are informing that this capacity will be in addition to the PM Surya Ghar Muft Bijli Yojana and Kusum Yojana. Along with that, these projects will be awarded in states such as Rajasthan, Gujarat, Tamil Nadu and Karnataka. As you are aware that the overall installed solar capacity has reached 90 gigawatt so far, and now government is planning to invite bids for additional capacity. Along with that, the government has already approved around 38 gigawatt of capacity under newly identified solar parks, which is very essential in order to achieve overall renewable energy capacity by 2030. Along with that, the government has set a target to achieve more than 50% renewable energy capacity by 2030, which is around 46.5% at this point of time. In addition to that, what we are also learning from our sources that the government will soon invite bids for 12,000 megawatt capacity of thermal power projects, which will be part of planned 80,000 megawatt of additional capacity. A very crucial development coming in, and that will be very important in the context of India's growing energy demand, which is expected to grow 8% and likely to cross 400 gigawatt in next 5 to 6 years.
All right. Thanks very much, Prakash, for all those exclusive details on this. With this, it's a wrap on your trades. Thank you so much for watching.